Good morning. This is Chrissy Farah from Solstice ATR. Hope everybody's doing great. These are my handles on Twitter, Discord, and YouTube channel. So what I'd like to do today is cover the overall market from November 15th through November 20th, what the outcome can be. Most important, we're trying to process in the last 5 days, last week's sessions or trading sessions, we had intermediate term driven by the stock market outlook was the declaration of Biden, whether he will be announced as a president or Trump will continue his presidency. We had Pfizer Monday spike up on effective vaccine announcement. Then it came back to reality. There's concerning spikes in COVID-19 cases and hospitalization throughout the United States in this pandemic. So, what I'd like to do is give a couple of examples in the electronically traded funds, in some futures, couple of equities. If you like it, hit the subscribe button. On YouTube, you'll get the weekly video for free, and you can follow us on Twitter or Discord. You can come join. So let's first of all, I will be covering some more stuff, but I want to go over certain specific areas that I'd like to cover. I have the combination of those four instruments, S&P, NASDAQ, the Russell, and the Dow. The S&P and the Dow have been around since the 1920s, while the NASDAQ and the Russell have been on a shorter period because of the tech sector, as well as the small cap companies. As you can see, it only goes back till 1997 in the small cap, while the Nasdaq goes in the 90s. So this is why I just put those four combinations. Historically, since the 2000 bubble tech sector and the Twin Towers, we had a correction in 2003. Took a couple of years to resettle at the bottom. U-turn took us a couple of years till 2008 to recover 100% of the gains that we lost in 2000 in the tech sector. Then we had the real estate bubble here, which was another mean reverse. We had a fall back down to the prior high lows in 2002, 2003. We recovered in 2013 because we had the 2012 the European UK area. Then we had in 2017 the president election, Donald Trump. We had a nice rally up. Then eventually we had the pandemic. What I'll do, I'll zoom in. I'm basically using an RSI divergence that allows me to see these areas. What I'd like to show you is that from the election, we had that nice spike up. Then we had the 2016 UK trying to exit the the European zone. That caused a small reaction. In 2019, this is the Trump tariff on China. Then we recovered till February of 2020, and eventually we fell back down in the March lows of the March 23rd. We had a bottom and eventually reverse and continue higher on the weekly charts. As you can see, that move back up. It caused the RSI, which is, a simple RSI. You can use an 80-20 or 70-30. We bottomed down and eventually came back up. And this last move up here in the last week's range, we had in the inside range, we had a look up because of Pfizer, and we came back in. We'll go to the daily so you guys can see it and why I did this way. On the daily, I'll show you the daily bars. I have a Fibonacci here in a volume profile. By accident, I forgot to take it out. Let me just remove it because it shows the information on it. Let's go to the volume profile. I gotta uncheck the support and resistance areas because I did not check them. We can go here, say no. We can go here, say no. We can apply it, and it basically disappears. So, okay, let's go back here. We had the annual high in August. We fell back down in September, came back in October, and this is now the November. We recovered 100% of the October monthly Fibonacci. As you can see, we fell down, we recovered 100%, and we broke out of this channel. If I connect this area here, we could get a channel, just that way you guys can see what I'm doing. Basically, this will help you, break out and break down. If I put a channel, there it is. Actually, it's in the charts. I'm sorry. I do have it in the chart. It's just marked with a lighter color. We consolidated, we broke up, we looked up, came back in, we stayed inside the channel. We tested it twice on Tuesday and Thursday, and we recovered a little bit. So this is the weekly chart. We're above this channel consolidating. Is it constructive to continue higher? Possibility. Is it possibility of falling back in? It can happen because we still have the vaccine to be announced and issued, if it's going to be working for the United States as well as the global markets. That's the first thing to get the economy started. The second thing is the Federal Reserve Board. Are they going to keep pushing money into the market and stimulus to keep the market going on the right track? Small businesses have been, opening and shutting down due to the international markets and the domestic markets due to the spikes in COVID-19, maybe because of winter in the US and Eurozone. So let's see what we can do to make sure we are on track. And I will go to a 30-day or 15-day 4-hour chart so you can see the move down. This is the monthly, and what I did, I took the high of the week and the low of the week Fibonacci, and we are inside the range of the last 5 days. In order to continue, we have to break above that 38.2 and continue higher. And if we fall below the 61 and come back inside that channel, we fall further down. So trade what you see, not what you think. And let's go, first of all, take a look at the RTY. And the RTY, I'll go on the daily instead of the 4-hour. Let's go to the day. As you can see on the daily, the RTY, we recovered the last month Fibonacci. We broke down and eventually we broke out. It looks very more constructive to the upside, other than that major wick up, come back down. It stayed inside the halfway range, and it needs to clear the 38.2 fib in order to continue higher. What I'll do, I'll zoom in to show you. This is the last month fib. I just kept it on. Remember, this is the November fib. I mean, we do not close it down till that month is basically finished in order to have a new fib for the monthly. And this is last week's range between the high and the low fib. We are sitting above the 61, above the 50, touch the 38.2 fib. In order to continue, it has to go up. If we lose the 61, then look back to the back side of this channel here, and you can see on the monthly it has resistance here. It's got the 38, the 50, the 61 right where it meets the channel, and that 50 SMA will eventually catch up with the 50 Fibonacci, and the 18 would be around the 38.2 fib. So that's the Russell. Let's take a look at the NQ. NQ is in a similar situation here. As you can see, it created a W formation. It's making a handle. It's a little bit more weaker under the hood in NASDAQ 100 because it consists of the Amazons, the Apples, the Netflixes, the Teslas of the world. The tech sector had a little bit more pressure compared to the small caps. So that's what I want you to understand. We are just right on the 50 fib weekly. So, I mean, let's see what can happen in the NASDAQ. Keep an eye if things are going to settle down and we get direction. Let's take a look at the YM, the Dow. The Dow Jones Industrial Average consists of 30 companies. As you can see, this was last month fib low and high. We eventually went to the 38.2 fib. We fell down, but it stayed in the upper symmetrical triangle distribution on the weekly. If I zoom in this area, you can see it is a little bit more constructive, the Dow, because of the Boeing of the worlds, and the major Dow components a little bit more on the conservative large cap value play than the tech sector. So it's heavily weighted on some similar, like Apple got added to the Dow while Chevron got taken out. I'm just kind of giving you an idea what to look for, because we got to keep an idea. Is the transportation, such as airline, shipping, cruise liners, are we going to go back online after they find that vaccine useful and be implemented into the economy or not to help the people that are out there in the workforce to restructure it? Let's take a look at the ES. And the ES is in a similar situation. We had the monthly fib from high to low. As you can see, when we broke out on Monday's wick up, we tested the 38.2 extension and the 23. We fell back in. We stayed, we tested a couple of times the 540 area, and we tried to break up. Look at the resistance. This was the annual high, 35.87. We retested it a couple of times coming back on Friday. Do we continue to go up on the weekly fib from high to low? We're right on the 50. So we're going to keep an eye and open mind to whether we trade to the upside or the downside. And you can see on the monthly fib, it grabbed the nearest low, which is the November low October, and we took the annual high for the year, and this is my 38.2 that I have to keep an eye on in order to stay constructive to the upside. If I do lose the 38, 50, and 61, this will be a tell if the direction does change. Let's take a look at gold, GC. That's where I consider, the instruments, if they're going to give us a little bit more leg room to the short side or the upside. As you can see, we are in a linear regression channel downtrending. We eventually broke out of that linear regression channel because this was the last month high and low fib for the monthly. We retested the 38 extension and we fell back in. And on the weekly, we are inside that bigger, wider range. This one is no longer valid. I can take that channel up here out, remove drawing. Where is it? And we can remove this one, and you can see we are in a smaller wider linear regression channel between this one here and this one here in a downtrend. In order for gold to continue higher, we have to keep an eye if it does hold the 1850 area, 1845, in order to continue, has to clear the 61 or the 3850 and the 38% fib in order. You can vice versa. If we're coming down, we look for the 38, 50, 61. Going up, we look for the 38, 50, 61 going up. In order to run, you need the gold to clear the 1925, the 61.8, clear this prior breakdown of this big move down, because that was the spike down in gold on last week's move because of the vaccine. So gold, they said, hey, there's no more fear. Let's just go back down, and it spiked down while it U-turned. It's got constructive. If there's a fear gauge in here, we're going to keep an eye on the dollar DXY, and it'll kind of give us a hint if the momentum is still to the upside. This is the dollar coming back down and U-turning back up on that change in the trend in the dollar. So another thing we can look at is the TLT, which I'll use instead of this. This is the 20-year Treasury bond. It will kind of give us a little bit more hints if the spikes are going to be down or up in the direction of the move. We are channeling to the down. We've got to keep an eye on the yield if it's going to increase or stay stable. And when the Federal Reserve Board are pumping more money into the market or taking money out of the market, because if this spikes up, this is telling us that, hey, interest rates are low, economy is going to stay up, and we are in a linear regression down channel. You can connect this channel here to this one down here, and you can see we are in a downtrend, and I can connect this bottom here with the near. We can do it to here, or we can spike it up to here, and you can see that we are in a linear regression down channel. What I'll do, I'll use the nearest high and low, and we can see we are in a wedge continuing down. In order for bonds to, if interest rates go up, this will fall, then there'll be something wrong with the market, and the market will follow. But if the bonds keeps, grinding and continuing higher, the price of it, the par value of it, then we can have a better understanding where the economy is. I use the TLT, which is the iShare. And this will kind of give you a better idea. And here, let's look at Apple. I haven't done BTC, and I come back to BTC. I forgot about BTC. As you can see, we went down, created a W, came back down, and we are inside the range. These two channels are no longer valid. You can take them away, because I usually look for breakup and breakdown using channels, and these channels usually help us to understand if the momentum is to the upside or the downside. We can draw or connect this line to this prior high. And if we break above this channel, we can continue higher. We are in a linear regression down channel. You can see it. But if I connect this one here with the nearest high here, nearest higher low here, we are in a symmetrical triangle. As long as we can hold here, this can continue higher, and the production on, in the distribution of Apple products out there, and if the economy going to go back, it's kind of gives you a better idea where we're at. If you notice, the Monday we fell down, Tuesday we recovered more than the body halfway through the body of the prior Monday dump. This is the high and low for the week. We are above the 38.2 fib, as you can see it, or the 61.8, because the machine grabbed the nearest high and low from top to bottom. In order to continue, we need to break this channel to continue higher back to the 124 range, 123. If we fall back down below the 117.05 and 116.06, look for the other side of the channel, or the 50 and the 18 SMA to continue higher. This is a crossing of an 18 and 50 to see if it can continue, because it's been range bound in the last month's range. So let's take a look at BTC, Bitcoin, and let's zoom down in here. As you can see, BTC, since it broke that 12, because it was consolidating around the 10, 12,000 area, and eventually we broke up. This is one thing I want to tell. We had an extension. I kept the old fib from here to the prior high, and if you can notice, we retested almost to 50. We touched the 38.2 fib, and we couldn't continue higher. This is something that you have to keep an eye on if BTC is going to continue higher or come back in. This is the monthly fib from the low to the high, which was here, and we eventually broke to the 61.8. As long as we are above the 61 and the 50, it can continue higher. I do have a sharper channel up here in order for BTC, and this is the new annual high for it. So is it coming back on the monthly chart to continue higher? What I'm going to do is maximize this chart. We're going to go to, instead of an annually, we'll go to, no, we can do it the other way around. Weekly 3-year. As you can see, this was the IPO when they first launched Bitcoin. That's what I consider an IPO, but it's just not really. It was just accepted on the exchanges to be traded Bitcoin in the US market. So it went up, dumped to 3,000, came back to 13, fell down to 4, then eventually we cleared that 12,600. This is why I had this fib from here to here, to see where the extensions are, and this is why I have the 50, the 61, and the 38. These three fib extensions are very important for me in order to see if it can continue above the 50 or fall below the 38 to come back in, and these are the reasons behind it. And I'll show you the monthly where you can see the fib once again from here to here. That was last month, and these are the extensions on it. And we have the weekly up here on the top. What I can do is go to a 4-hour 15-minute. You can see where my low was anchored in the last 5 days, and the high where it is right here. We need to hold the 38.2 fib on the weekly chart, or the annual high extension, which is the 38.2, in order for continue. If I fall through this channel, look for the backside of the major channel here and the 50 down on this side. So that's BTC. And let's just take a look at PFE, since that was the announcement. This is something I'd like to show you. This was the Monday spike on the news. In the overnight action, it happened at 4 in the morning Californian time. We fell back inside the range. Tuesday they looked up, eventually fell 2/3 of that big candle, and by Wednesday, Thursday, we fell back down to the bottom of the body in the overnight, trying to recuperate and come back inside the Monday's 2/3 of the range or 1/3 of the range back up, which is the 61.8, 50, and 38. So you can vice versa, if it's going to continue higher, that would be 38, 50, 61 would be resistance if it breaks through it. And if it cannot continue higher, it falls back in. So this is something to consider while you are trading on a shorter time frame. Look at the shorter distance. We look at the longer time frame for direction and a shorter distance for actively trading the market according to what we see on the charts, not what we think. And I want to show you a couple of things on my charts because I covered some of this. I'm not going to go over each one. Boeing was another one that made the Dow stay a little stronger. This is basically taking a look at since 1994 using a MACD or RSI divergence, because remember the Russell and the Nasdaq cannot go further out. This is why I stopped in 1994 using the stock market overall S&P 500, or we can look at 1,800 companies in the U.S. markets, which is represent the major overall market. But the S&P is a concentrated portfolio of 500 companies. And we look at the bond ratio in relationship to the 1981-2020, these spikes, I mean, we can see in the first near short term, we can have a down move up to 4.5%, 8%, downside 6% on the shorter time frame. And if you look at a 2-year outcome, we have a 19%, which is the lowest we had in 2009, and the highest we've had was 42 in 2012. If we can look at the major average, which is about 30%. So if you look at the short time frame, we can have a down move, and in the long time frame we can have a more outlook after 3-year range of a minimum of 37, an average of 45 rate of return. And one more, so that way you can get a better idea. If we take a look at just the S&P using a MACD or an RSI, where we had the downfalls and the reversals to recorrect from 2007, 2008 real estate bubble. It took us till 2012, 13. This was the European zone when the British exit was coming. This was the 2016 French election, 2017. Donald Trump became a president. Obama left the White House. And this is the pandemic that we had in February till 2020. This is the major drawdown we can fall if we take a look at the numbers in the S&P 500, how far we can fall and how far we can recorrect by using those instruments. So I hope this was helpful. I look forward to seeing you on our Discord or on Twitter. If you like to, to follow us, do so, and take